Business News Now, and it's all about the central banks today. The Bank of England has raised rates again, despite warning the UK economy is already in recession. That came less than a day after America's Federal Reserve admitted that an economic downturn is increasingly likely there. And in Tokyo, the Bank of Japan keeps rates below zero, but intervenes directly in the foreign exchange market to bail out its stricken currency, something it's not attempted in decades. Well, here to discuss all that and the rest of the business news of the day, including African states renewing calls for debt relief, is our eyes correspondent Laurie Laird, who joins me from London. Good to see you, Laurie. So a week of frenzied central bank activity. Let's start with the Bank of England. You're in the UK, of course. Any surprises there?
Not so much, Charles. I think some of us thought that the Bank of England may have raised by 75 basis points or 3/4 of a percentage point rather than the 50 basis points they decided on, although a big minority of central bankers at the Bank of England did vote for that higher rate hike. I'm telling you, though, Charles, we're looking at slowing economies. We're looking at very, very high interest rates. We're looking at central banks intervening in the currency markets. I feel like we're back to 1980. I feel like I should be talking to you with shoulder pads on. This is so much like the 1980s. It's so much like an era that we thought was consigned to the history books. This whole concept of very slow growth, if not recession, and very high interest rates to deal with very high inflation is something it's called stagflation, and it's something we thought we had banished.
Yeah, that memory of shoulder pads. I can just imagine you.
I look for some expressly for this chat, Charles, and happily I have.
I can see you wearing them, though, full of the ebullience of life. But just moving on. All of this, of course, happening just a day before a massive fiscal statement in the UK.
Absolutely, and I'm looking forward to talking to you about this tomorrow. We'll get a lot more information tomorrow, but we know a couple of things. We know that the UK is going to reverse its ban on fracking, which is the process of using sand and water to blast under what's called shale rock and extract oil and gas. The UK government had banned that from 2019. A U-turn announced today, and bizarrely on the same day that the British Geological Survey came out with a report that's been sitting on the government's desk since the 5th of July that said that a lot more study was needed to see whether fracking will cause earthquakes. So that is one of the things that has been pre-announced. A number of other things, tax cuts seem to be on the horizon. And the question will be, do these tax cuts ultimately raise demand? Does that mean the Bank of England is going to eye higher inflation and raise interest rates further?
And of course, beyond the scare of the potential of fracking causing earthquakes, it's supposed to strengthen Britain's energy security, but is it likely to help British consumers?
It's almost impossible to tell at this moment, Charles, because there's no consistent assessment of how much oil may be in shale rocks here in the UK. A geological survey dating back from the early 2000s came up with a number of something along the lines of 65 trillion cubic meters, perhaps trapped underneath the ground. No, that sounds like a lot, but let's put it in perspective. A more recent survey came up with an estimate of more like 4 trillion cubic meters. So we don't know how much, there's no agreement on how much is there. There's no agreement on how much is recoverable at what price. So as for whether this could be a game changer, we simply don't have the information to make that assessment yet.
Well, let's turn from the UK to the US. You talked earlier about the Bank of England raising rates. That comes after the Federal Reserve also lifted rates. Was that expected in America?
It was, Charles, although a number of people, and I'll put myself in this camp, looked for a slightly higher rate hike of a full percentage point rather than that 3/4 of a percentage point. But I think what was most striking is the Federal Reserve seems to be abandoning this theory that they can engineer what they call a soft landing, which is slowing the economy, bringing bringing inflation down, but without a major recession. And I think the Fed is now starting to say this is going to hurt more than we let you know. Still really interesting though, Charles, the Fed looks for, during the course of the slowdown that they're trying to engineer in order to bring inflation down, they're looking at an unemployment rate maxing out at 4.4%. We're below 4% as it is. That to me seems a little bit suspect. If you're going to slow an economy down, that seems like a very low maximum unemployment rate. And I think one of the things we have to remember is over the past year and a half, there is almost no central bank on the globe that has got its forecast right, either for economic growth or for inflation.
And briefly, just to complete the banking circuit, the Bank of Japan turning something of a shocker there.
Absolutely. Bank of Japan. One thing that wasn't a shocker is the Bank of Japan, which also met today, didn't change interest rates. So interest rates remain negative in Japan. And it's the only central bank in the world that is still sticking to negative interest rates, even though inflation is starting to climb there. We're at about 2.6%, lower than 2% if you take out volatile items like food and energy. But what the Bank of Japan did is, again, this is going back to the 1980s for me, is they have intervened in the currency markets to try and support the yen. The yen has lost about a fifth of its value against the dollar this year. That is contributing further to inflation in Japan. It's making exports more competitive, imports of which Japan has many more than they used to, particularly natural resources, getting a lot more expensive. This sort of direct intervention in the currency markets is unusual. The only central bank that's done it over the past couple of years is Turkey, which is not considered a paragon of central banking. Shocking to see the Bank of Japan so concerned about the value of its currency that's going to the open market, because economists haven't decided whether this open intervention is helpful or not over the longer term.
And finally, before we go, Laurie, we've seen several African leaders at the podium at the UN General Assembly in New York calling for pandemic debt relief, suspension or rescheduling of debt payments for middle-income countries as well. Nigerian President Buhari pleading for debt relief. Might his wish come true, and all their wishes, in fact?
I wish I could give you better news here, Charles, but I think almost certainly not. We did see President Buhari in his essentially valedictory address. It's probably the last time we'll see him at the UN, at least as president of Nigeria. We saw the maiden address from the new president of Kenya, and they said the same thing. Will you please consider debt relief? You did mention restructuring debt. That may be something that middle-income countries can convince the rest of the world to come on board with at some point. But the big problem, and this is a new problem with indebted countries, is that their debts are much more dispersed than they used to be. There are debts to the multilateral institutions like the World Bank or the IMF. There are bilateral debts to individual countries, of which China has become such an important player. And getting these different groups of lenders together to agree terms is proving to be, at the moment, pretty difficult to do.
Laurie Laird, ranging across the business world. Thank you very much indeed.
Thanks, Charles.